Hey, what's up, guys? My name is Michael King, an analyst for Forex Signal, and today I'm going to try to analyze the Euro USD, try to explain the Euro USD analysis, what is going on in the market right now, and a good trade setup for it. So, looking at Euro USD, switching to the monthly time frame, you can see that we have a support line at 1.03636, and it's kind of the last line of defense for an upside, but if this support line can sustain it, then I believe that we're gonna see a further fall of the Euro USD currency pair. Now there are two positions as well in Forex. We have the buying and you have the selling. So we have the buy setup and the sell setup from this. So I'm gonna try to analyze how you can buy this particular currency pair probably tomorrow or Monday, or how you can sell this currency pair depending on your bias on it. So I'm gonna try to switch to probably a lower time frame. Here's the H1, and looking at a lower time frame, you can see that there's quite some price movement right here. Price moving up to an extent, but I don't know if there might be a rejection. So this is what we're gonna do right now. So if your bias is on to buy this Euro USD, then you can probably wait for price to try to break this 7 moving average, then maybe price to close up to this point, or you can be patient enough to wait for the next day. So it switch to the D1 time frame, then price should this should be the first resistant line. If I'm not mistaken, this should be the first resistant line. Then after price break this line, you can look towards this should be your next support and resistant line. So our first resistant line is at 1.04707. The next resistance line is at 1.06360. So if you're having this bearish bias, then looking at this, you might want to trade it. But I would suggest you hold on for the time frame, the daily time frame to close, the candlestick to close, and wait for a new one for it up into the trade. Or if you are using the H4 time frame, then I think you might be more comfortable with that, because the bigger the time frame, the more accurate your analysis might be. Get the point? So looking at Euro USD on the H4 time frame, as you can see, there is quite an inside bar that's about to form right here on the H4 time frame. So you can set a, as soon as this H4 time frame is closed, you can probably set a buy stop order. Like, let's assume that this H4 time frame close at this point, you can set a buy stop order somewhere at 1.03823, then with a stop loss right below it. Then your TP1 shouldn't be above this place. I recommend maybe just 30 pips. So if you are buying at this point, your TP1 can be somewhere around here, right below this place. Let's try to switch to a small time frame. So if you are buying at this point, for example, then your TP1 can be somewhere around here. It depends on how much targets you're pursuing for your first TP. Now TP2 can be right above this point, then TP3 can be at this point. So that is a good setup on Euro USD. But let me try to explain how you can actually short the market if your bias is to sell it. So still using this support line, if you want to sell this currency pair, you have to wait patiently for sellers to come in and for price to close below this line. If you look at it, this came down to this point, then it's actually closed at this level. But if you look at it, the next candle actually went up. So when price closed at this point, if your bias was to sell it, you could have just like placed a sell stop order somewhere at this level, right below it. Then the fact that price then came down to activate your trade simply means that it's not a time for price to fall, or maybe price want to start making an upside move, trying to make move towards the upside. I mean, so the fact that price being able to like activate your order simply means that it's making a move to the upside. But let's assume that when price get to this point closed, and you probably place a sell stop at probably at this point and at a 1.03528, and price came down and activate your trade, then there's chances of price falling, price will keep falling down. So if your bias is um you are really feeling that price might go down, so you can just place a sell stop order at this point, but that is quite risky. What I recommend is you have to wait for the sell candle to close right below this level. Then when it's closed, you can set a sell stop order right below it. Then your stop loss can be at this point 1.03925. Then like I said earlier, your TP shouldn't be much, just maybe just 30 pips TP or 50 pips TP, but I recommend 30 pips as your TP1. Then your TP2 can be 50 pips or 30 pips. I mean, 50 pips or maybe 70 pips, depending on your interests, depending on what you're interested in gaining as a forex trader. So that's all from me, Michael King, analyst for Indian Forex Signal. Hope to see you next time. If you enjoy my content, please subscribe and like, also share. Thank you very much for your time. Do have a nice day. Bye.